Right, hi everyone. My name is Richard Perry. I'm the market analyst at Handtech Markets. I'm hoping that you can see the correct screen. I'm trusting that you can see my slides and also hear me. So on the assumption that you can, then we'll go. Right, well, this is non-farm payrolls for September. Normal webinar, we're going to talk through the expectations for non-farm payrolls. We're going to do sort of look at the implications as well. But first of all, we're going to show you the disclaimer. Thank you, John, for helping. Talk through the disclaimer. Yeah, I mean, just it's the same one every week, every month, and yeah, just read and understand it. And I'll show it to you again at the end. Normal situation, really. Look at the expectations, drivers of market reaction, markets to watch, and a bit of live analysis as well as we look at the reaction. Just a little bit of sort of admin as well. Any questions, please put them in the questions box. There is a chat box as well. However, I think the questions box tends to work a bit better. Right, so into what we're looking at this week, or this month on payrolls. We're looking at no expectation of a rate hike in September. So my feeling is that this payrolls report would be a payrolls report that shows positive risk sentiment on a strong report. So that would mean risk assets pulling higher, because basically there is no expectation of a rate hike. So subsequently, if you get a really strong payrolls report, the expectations of an imminent Fed rate hike are pretty much zero. In fact, I can show you. This is CME Group FedWatch, and they are, as you can see, pretty much non-existent. In fact, a 1.4% expectation of a rate cut, which is incredible when you look at it. So that's for September. But in terms of December, the rate hike expectations are still fairly low on December. So let's just show you them. It's around about 35. Well, it's actually gone up in the last day or so, 40%, but still pretty much no expectation of a December rate hike at the moment. I think the data is probably going to be changeable, obviously, in the coming months, and this could well be a payrolls report that is forgotten fairly quickly as the market sort of looks out closer towards December, which is the sort of realistic 50-50 chances of a rate hike. Inflation remains a big issue, and that's subsequently why average hourly earnings is such a focus for markets or traders. And I think subsequently that the headline payrolls report, headline payrolls number is still a clear issue. You look at how the market reacted last payrolls report to a stronger than expected headline, but disappointingly weak average hourly earnings. There was an initial move in the direction of the headline, and then the average hourly earnings sort of just disappointed the market and dragged the reaction back, and then the market went in the direction of the surprise. So I'll talk you through trading the direction of the moves in a bit, but just at the moment I'm sort of want to just focus on the expectations of this payrolls report. We've got 180 on the headline, 2.6% average hourly earnings. That is a mild increase on average hourly earnings, but I can show you that on the recent numbers, 180 for headline is basically bang in line with the 6-month average. The average hourly earnings, however, yeah, 2.5 for the last couple of months. 2.6 would hardly be sort of anything to really write home about. So the market would take 2.6% as a mildly dollar supportive, I think, but nothing really excessively strong. U6 unemployment will be interesting, because I think the expectation is that perhaps the US is close to sort of bottoming on unemployment. And you see unemployment, which has sort of been bottoming around sort of 4.3, 4.4 for the last few months, really. But U6 unemployment is interesting because it hasn't really stabilized for a few, basically it stabilizes and then continues lower, or has done historically. So if it starts to tick higher, say for example to 8.7%, that could be a signal that the market is looking out for, that unemployment has bottomed. But then the market would be looking at the average hourly earnings. Will average hourly earnings start to pick up as unemployment bottoms? That is the big question. And obviously the Phillips curve is clearly still at the front of the minds of Fed economists such as Yellen. And yeah, if average earnings doesn't start to pick up as unemployment does, well, that is not great, certainly for the prospects of inflation going forward. Now, in terms of revisions, we're also looking at whether you get downward revisions, upward revisions. But my sort of thoughts about unemployment are interesting. I think because sort of if you start to see unemployment falling again, does that actually suggest is that a strength of the economy, or the fact that there is still slack in the labour market? I think that would be the question mark around fall in unemployment. I think if it comes with the participation rate rising, then that would be a positive. But yeah, I think it needs to see the participation rate rising, which would suggest more people coming back into the economy. And yeah, I think it would need to see participation rate rising substantially, sort of 63% and above would be strong. And unemployment falling in that scenario would be a positive. But certainly, I think if the participation rate doesn't rise and unemployment falls, then that's not necessarily a strength of the labour market signal, in my opinion. But ultimately, average hourly earnings and headline payrolls are the key here, I think. Now, in terms of reaction, it says in red at the top, with no rate hike imminent, positive data is positive for risk, and fundamentally that just basically means treasury yields rising. That would strengthen the dollar, but also that would be the big movers on the negative side would be the safe havens in that scenario. So you'd see the safe haven plays on a strong report, which is positive for risk, i.e. the yen and the gold price. They would come under pressure. So I've got three scenarios here. A weak payrolls report would be dollar negative and safe haven positive. In the forex space, you'd be looking at the yen being the big winner in that scenario. Volatility across the other majors, primarily because of the dollar weakness, you'd likely to see support for the dollar pairs, but I think it would be in terms of the crosses, in terms of sort of Aussie and Kiwi. I think they would come under a bit of pressure against this more safer haven euro in that scenario. Commodity prices in a weak payrolls report, gold strong. Gold has been strong as the dollar has been under pressure. That is a decisive trend, and that is likely to continue. In terms of equity markets, I think that it would be a negative impact on equity markets purely because of this, the implications it would have for risk sentiment generally, and I think the recent rally that we've seen on the likes of the DAX and the CAC back to big key downtrends, they could come under pressure. Now, in line would be muted. Generally, if all the expectations were hit, I think that would be a muted reaction. A mixed payrolls report would be difficult to ascertain, and I think you could see some jumping around. A mixed payrolls report being headline payroll strength. However, for example, if average hourly earnings fell, that would be very that would go in the direction, I think, of headline payrolls, but then big correction on the average hourly earnings, for example. Little question from John. Currently in the US, we have generation known as millennials. These people tend to not want to have jobs. 15% live with their parents. Okay. Yeah, sorry, that was going back to the unemployment question, which sort of I have now covered to an extent, I suppose. Right, so inline payrolls report, yes, mixed payrolls report, generally limited volatility if it's in line. I think volatility could be higher, obviously, on a mixed payrolls report. There's a surprise on the upside or the downside on sort of headline or average hourly earnings. Now, a strong payrolls report would be the driver of the most volatility, basically because we've had the dollar under so much pressure recently. So I think generally speaking, that would be the one that would be driving the biggest market move. Primarily look at treasury yields, but also on the FX space, look at dollar yen. Dollar yen is always a big mover on payrolls report purely because of the sort of safe haven status that the yen takes, and also the dollar strength that you get from a strong payrolls report. So if you get a strong payrolls report, that would be a dollar rally, that would be yen negativity. That would be a big mover, dollar yen. Watch out for that. Euro correction also would be a major theme, I think, here. Euro has been strong, but sort of showing signs of a little bit of correction possibility in the last sort of couple of days. In terms of commodities, gold, a profit-taking move on gold, possibly back below 1,300 would be the move there. I think indices could rally on a strong payrolls report. Now, the spike. How to do on the initial move. What we had last month, this is euro dollar. You had the headline payrolls surprise to the upside, subsequently dollar strength. I think the average hourly earnings then kicked in, which the fact that average hourly earnings were slightly disappointing, that induced the spike back. So you had the spike down and then the retracement. But then the market started to take on the board the fact that we had sort of a more positive headline payrolls number, and subsequently the dollar started to strengthen in the hours subsequently to that. So in sort of about an hour and a half between 1:45 and 2:15, this is UK time, you started to see dollar strength, and quite significant as well, as the market sort of pulled euro dollar lower. So it's from 1860 down to 1730. So that's 130 ticks. So that's a quite a sizable euro dollar move. But ultimately the market moves in line with the data surprise. You'll see predominantly maybe a 10-minute move in the direction of the surprise usually. So a strong payrolls report would be dollar strong, pulling euro dollar lower. So you get in the direction of the surprise, and then you'll often get a pullback. So watch that pullback is the main thing I would say here. Often it will happen after maybe 10 minutes. Last month it was a lot sooner than that. But you will then tend to get a move in the direction of the surprise. So watch out for the overall sort of drivers of this payrolls report. Sorry, a question from Mr. Smith or Mrs. Smith potentially. Sorry, Richard, what would be classed as a strong payrolls report? So yeah, very quickly, let's go back to that strong payrolls report here down the bottom. Strong payrolls report, more than 210, I'd say. Average hourly earnings 2.7 would be strong. Stable unemployment, stable underemployment, and a participation rate going up. I would class all those factors as a strong payrolls report. So strong in the 200s, pushing 210. I think that's getting stronger. Average hourly earnings above 2.7. Certainly, if you got the headline strength and also the average hourly earnings picking up, that would be a strong payrolls report, and the dollar would certainly move on that. Okay, so we've got a minute to get this data out. So I'm going to get some. Where are we looking? We've got that. We've got that. And we've got my data board there. So here we go. So you've got the headline payrolls at the top and the data here. And then you've got a little bit of a data board, a few charts to watch. And, oh, okay. Markets are flying around a little bit. It seems as though we're on due imminent. So I'm going to just tweet about this as it comes out. Payrolls, worse than expected on payrolls on the headline. Average hourly earnings, yeah, disappointing. That is dollar negative. That's going to be big dollar negative. And a downward revision to last month. Oh dear, this is big dollar negative, I would say. Big downward revision, big miss on the downside. Average hourly earnings missing. unemployment going up. So you've got average hourly earnings missing on the downside. You've got unemployment going up, unemployment bottoming, average hourly earnings not coming through, participation rate not picking up. It doesn't look great for the dollar. Does not look great for the dollar. And you're seeing that big spikes. So I'm going to quickly tweet this. Big disappointment. Not for payrolls. 156. So increase and yeah, just misses all over the place really. Oh dear, oh dear, oh dear, oh dear. That is not great. So yeah, you're seeing that big knee jerk. This is a real trending report, I would say, in terms of the downward revision of last month as well. Miss on the headline. You've got all over the shop. Unemployment going up, but average hourly earnings going down. Underemployment static. So yeah, this is not great. Not great for the dollar, and not great for the prospects of rate hikes, really, you'd say. Certainly the yeah, this is not great. So 50 ticks on euro dollar, 40 pips on sterling dollar. The big mover being 50 pips on the downside and accelerating on dollar yen. That is the big mover at the moment. We've got very quickly show you treasury yields. Come on. Treasury yields 2-year dropping, 10-year dropping. Look at those treasury yields dropping away, back below 2.1% on the 10-year. Annoyingly, that's not connected. Yeah, 2-year dropping away back to 1.3. This is this is big dollar negative. This is big dollar negative. Not great. You could easily see a pullback though of small proportions, I would say. That so we're watching for the initial move to the dollar negative side. You might well get a small pullback, but I wouldn't expect it to be that significant. I think this is going to be a trending move, considering the market is not expecting a rate hike in September, considering the low expectations of December. This is not a great payrolls report in any way at all. Yeah, this is not great for the dollar. So just euro dollar stabilizing a little bit, 109.65 on the dollar. Yen 109.80 was a key near-term support that just got smashed on dollar yen. Key near-term breakout to the upside, so that's just got smashed. Gold spiking to new highs, 13.27, spiking to new highs on the gold chart there. You've got negative move on equity markets. This is risk off, definitely. Risk off, definitely. Although you've got the Aussie, which has pushed higher, that is primarily due to the dollar strength, I would say. So this is risk negative, certainly with the gold price spiking higher by $7. Watch out for the little retracements. You're seeing a bit of consolidation at the moment. Okay, Mr. Smith or Mrs. Smith. So lower dollar means Dow Jones rebounding higher. I think generally speaking, probably not, because you would argue that this is a risk sentiment or a negative risk play, and you'd see that in the reaction of the Dow. I haven't got my futures going on here, so I'm not entirely sure how the futures are shaping up there for Wall Street, but I would say that the initial knee-jerk reaction down on the DAX would suggest that equity markets are lower on the back of this on Wall Street. So still pushing higher on the initial reaction. That little consolidation seems to be sort of mildly pushing higher across the Forex majors. Gold still sort of trading around that 1328 level. What does this do for the daily charts? Let's have a quick look. FTSE, no, let's look at euro dollar first. Yeah, breaking back higher, breaking back above that 1909 level, which was that breakout level. That's a positive move. Sterling back above, wow, sterling breakout. So that is a key move. Sterling back above 29.80, which was Tuesday's high. So that is a near-term breakout. So that if you sort of close above 29.30, that is a key move on sterling today. Dollar yen back below that pivot, that near-term pivot that we've seen across August, that had been holding. You've seen dollar yen breaking below that, so that near-term pivot at 109.80, that becomes a resistance now. Let me show you the hourly chart on dollar yen to show you that. Yeah, we're back below that. If you break below 109.50 on dollar yen, I think that starts that trend lower again. So watch out for that. On gold, on the hourly chart, yeah, we've seen the breakout, near-term breakout on gold. Daily chart pushing out to new highs dating back to the day that Trump became president. 1337.40 is that resistance on gold. That is the next one to watch. Okay, let's look at euro yen. That'll be interesting. Yeah, euro yen still holding up, so that is definitely a risk positive move, holding up towards the day high on euro yen. So sort of, I say risk positive, sorry, risk negative. So ultimately on euro yen, the likelihood is that you'd see the sort of trading around, but you could see that breaking lower because of the sort of risk off aspect of this sort of payrolls report. So you could start to see euro yen starting to sort of creep back lower again, and ultimately that's sort of what you've seen, a little bit of volatility, but starting to creep lower by a few ticks on euro yen. So yeah, watch out for that. Now in terms of DAX, yeah, I'm still sort of on the expectation on the DAX that we're sort of up towards a downtrend, rally to the downtrend. Broke back above it marginally, but you saw that through late August, and then it fell away. It'll be interesting to see if the DAX starts to sort of drop back again. Okay, so let's look at how those daily moves are shaping up again. Yeah, just starting to pull back now, starting to pull back. I don't necessarily think this pullback is going to last especially long, and I would expect that what you'd see is a support that comes above the point at which we started at, purely because you do tend to see this little pullback, and you're seeing it across all these markets. Interesting. Gold sort of back 13.26. It was up at 13.28. You're seeing the Aussie pulling back slightly, 20 pips. You're seeing dollar yen pulling higher, back above, back towards 109.80. I think 109.80 to 109.90, that could be where you start to see the dollar yen spike retracement sort of falling over again. So you're starting to look for a bit of a settling of this move, this initial spike higher, starting to retrace. I'd say that because of the sort of across the board disappointment of this payrolls report, you're still likely to see a trending move. And as the sort of US traders sort of take hold, I'd say that this is likely to be a move that ultimately goes back in the direction. So I'm still looking at euro dollar 120 is a possibility here. 1979 so far is the high. I'd say euro dollar testing 120 is perfectly possible in due course. So looking to buy into this near term sort of retracement move on euro dollar. Same with cable. 29.30, as I said on cable, is the key move on the daily chart. Sort of back to 29.70, 29.80, which was that high the other day on Tuesday on cable, starting to find a bit of support. So if you start to see this market starting to find support, which already it might well be, certainly 109.80 on dollar yen and 129.70 on cable. That could be an interesting entry point, because I think ultimately these markets are going to swing back again. So euro dollar probably back to swinging higher towards 120. You're likely to see cable, I think, breaking back above 130 figure. 130 figure is a resistance on cable. 130.30 towards 130.50 is a medium term resistance now on cables. You could see that threatened, but it's interesting to see. We've had that initial spike, We've seen a little bit of a retracement, but because it's such a decisively negative payrolls report, you don't see much of a retracement. Whereas sort of when the payrolls report is a little bit more mixed. Oh, interesting. Look at that euro dollar started. Wow, dropping, sharp drop on euro dollar. Complete retracement now. So is cable going to follow that move to the downside? Maybe 29.50 could be seen on cable if euro dollar has. Wow, that's interesting. Euro dollar has completely unwound that move. Dollar yen starting to pull higher. Okay, that is interesting. That decline on euro dollar has gone further than I thought it was going to be. But are we going to start to see support holding on euro dollar? I can't see for the life of me why this would be a dollar positive payrolls report. I really don't. And I'd imagine that this is going to be a nice little buying opportunity on euro dollar here, back towards that 119.10 to 119.30 sort of trading band that we had seen. So let's show that on the daily chart sorry, wrong market. So let's show that on euro dollar. Yeah, just unwinding. That support 119.10 may be where it sort of pulls back to, but I can't for the life of me believe that euro dollar is going to weaken significantly on the back of this. I think this is just playing out as part of the retracement, part of the fib, the post payrolls knee-jerk retracement. Looking at euro sterling. Yeah, fairly neutral reaction on euro sterling so far. Nothing to really change it. I mean, I looked at euro sterling the other day as we sharply moved to the downside, and that looked to be sort of topping out. Look at these momentum indicators daily. MACD cross negative, stochastic sell signal confirmed, RSI sell signal back below 70. This sort of puts pressure on euro dollar to the downside. On euro sterling to the downside. Is that being seen in the hourly chart? Well, you could argue closing in on a head and shoulders top pattern really. So a move below 91.80, certainly on a decisive hourly chart basis, that would complete that little head and shoulders top pattern on a technical basis as a sell signal. So how's that retracement going? Yeah, just sort of settling a little bit. Yeah, 190. Interesting. Euro dollar 119.07 got to that, and that was that key breakout level, wasn't it, on euro dollar? Didn't see much of a retracement. I still think that this is going to start to see euro dollar settling and pulling higher. Dollar yen didn't really react, so it's only really the euro that reacted sharply to entirely retrace the move. Cable has sort of settled to a degree, as has dollar yen, as has gold. Sort of not. So these other markets that we're looking at have not really unwound that retracement. It's only really been euro weakness that has unwound that move. So yeah, these are. I believe you're going to get a settling of these markets. I think that you're going to start to see cable pushing higher back to test that 130 big figure level. I'd be surprised if we didn't see another retest of 1980 on euro dollar, which is wow, 60 around about 60 pips higher. Interesting that we're seeing the DAX, which is just unwound a little bit, just consolidating a little bit here. Gold really consolidating, but I think ultimately this is all dollar negative, and you're going to see these markets holding on to these breaks. I would expect to see euro finding support around that 119.10 mark, and then ultimately pulling higher. As I said, I cannot see for the life of me how euro dollar would be breaking lower on this payrolls report. This is for me, this is a surprise that we're seeing this. You've had a full retracement of the initial break up on euro dollar, and I do not expect that we're going to see too much further really in terms of downside moves on euro dollar. Sorry, I've just looking at your name, Mr. Gabai, Mia Gabai, is saying that is sort of looking at this potential topping out of euro sterling. So I'd be surprised if we saw the euro starting to sort of break down. I think that having sort of broken back above what is I see as a near-term pivot around that sort of 1920 mark, with that support of the 1910 long-term breakout, I think that this is a buying opportunity on euro dollar. This little retracement move that we've seen. So yeah, I think what I'm going to leave you with is, because we're sort of running out of time, is just generally, I think that the euro is likely to find support around this 1910 mark. I think ultimately you've had a sort of a minor retracement of that dollar weakness with cable spiking high. You've had a minor retracement of that move. I'd be shocked if we didn't see another retest of those highs, 130 on cable. I'd be surprised if we don't see, because as I said on the hourly chart, let's have a look on dollar yen, we've got that pivot around sort of 1980, 1990 on dollar yen. Sort of 1980, 1990, there is a pivot area, and the fact is we're back to that now on dollar yen. So I'd be surprised if we didn't sort of settle around here and then start to track lower potentially. On gold, oh crikey, what's that doing that for? Undo that. On gold, yeah, I think this generally is a dollar negative move that ultimately back into sort of area of support, you could argue, on gold over the last few days. 23 to 25 area likely to be supportive on gold. So I hope all that has helped you on your non-farm payrolls report trading. Follow me on Twitter at HandTechRich, where you can get further updates on my market views. I've got a LinkedIn trading group called Forex Traders Talk. More payrolls are trading next month, and with that in mind, I will leave you with my disclaimer, at which point I say thank you very much for taking part, and I will see you all again soon.